So let us move on with lesson 3. So we are in lesson 3 of the working capital management. Lesson 3 of working capital management, and specifically, we are going to talk about the prediction of working capital requirement. Prediction of working capital requirement. So prediction of working capital requirement, 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 and we shall say it entails forecasting the working capital needs of a firm. So we say it entails prediction of working capital of a firm. Working capital needed for the firm. So it entails prediction or forecasting. Let's use the word forecasting. Let's use the word forecasting because to me apparently the word prediction. So it entails forecasting of the working capital need of a firm. So that's the work of this topic or this subtopic. So the important thing is we need to know how to forecast or to prepare the working capital need of a firm. Now, it refers to the capital. So the working capital requirement refers to the capital, refer to the working capital needed, capital are needed to settle short-term obligation of a firm. To settle short-term obligation of firm. Obligation of the firm. So the capital that is required. So the capital that is required, which is enough. So the capital. So let us use the word capital. So it refers to the capital needed to settle the short-term obligation. That is what we mean when we say the capital working capital requirement. So working capital requirement refers to the capital needed to settle the short-term obligation of a firm or an entity. And working capital is equal to the current assets minus current liability. So working capital is equals to current assets minus current liability. We can talk about the steps followed. So steps followed when preparing the working capital requirement. So step 4, number one, determination of total current assets. That is step number 1. Number 2, determination of total current liabilities. Determination of total current liabilities. Number 3, subtract total current assets from total current liabilities. So that's the steps. So we have only one question from 2015 up to now, so November 2020. So between 2015 up to date, only one question appears. So November 2020, question number 2B. November 2020, question number 2B. November 2020, Question number 2B. So November 2020. Question number 2, boy. So the question is about Nderu Ltd. So let me read the question. Nderu Suppliers Ltd is reviewing its working capital commitment for enhanced efficiency. The following information relates to the period ended that 1st March 2020 is provided. We have turnover. So turnover is 15 million. We have direct material that 30% of the total sales or the total turnover. Direct labor is 55% of the total turnover. Variable overhead is 10% of the total overheads. Of fixed overhead is 15% of the total turnover. Then selling distribution is 5% of the total overheads. Additional information number 1. On average, account receivables take 2.5 months to be paid. That one is okay. 2.5 months to be paid. Number 2, raw material are in inventory for 3 months. So raw material in a store for 3 months. Work in progress represent 2 months. Worth half of produced goods. That one is okay. Then we have the finished goods represent 1 month of production. Then credits are taken as follows: direct material 2 months, direct labor 1 week, variable heavy overhead 1 month, fixed overhead 1 month, standard distribution half a month. Work in progress and finished goods are valued at the material, labor, and variable expense cost. Then labor force is paid for 50 weeks in a year. Required: assess the working capital requirement of the firm. 8 marks. So assess the working capital requirement of the firm. The total marks 8 marks. So let us do it. Let us do it together. So we move on. So let us start the workings. So tunaanza na huko juu. So tunaanza na direct material. So direct material is 30% of the turnover. So 30% of the total sales. So we start with direct material. Direct material. Material, which is 30%. 30% of 15 million. Haya. Direct labor. Direct labor hapo naona ni 25% of 15 million. Of 15 million. Haya. Variable overhead, so hapa naandika just in short 10%. Variable overhead is 10%. And then fixed overhead. Fixed overhead. Now for fixed overhead wanatuambia ni 15% of 15,000. Haya, kutoka kwa fixed overhead tunaenda kwa selling and distribution ni 5% of 15,000. So we can get all those figures now. Let us multiply zote. So tuanze na ya kwanza. So start with the first one. Now hizi ukiziacha zinafika 100, hazifiki 100 actually. It's 85, total 85%. So 0.3 times 15 million. That is 45. Remember is in Kenya shillings. Then 0.25. This one is 37.50. Then 0.1. 1,500. Then 0.15, which is 22.50. Then 0.05, which is 750. That is 750 thousand. So let's go to additional information number 1. Now, on average, account receivables takes 2.5 months. 2.5 months. So 2.5 months of what? 2.5 months of the. So receivables goes with the sales. Now receivables goes with the sales. So tunaanza na receivables. So we start with account receivables. Account receivables. Wanasema account receivables take 2.5 months, so ni 2.5 over 12. Now receivables goes with the sales, so you need to know that one. And our sales are on credit, so this is our sales, 15 million. We are going to assume the sales are on credit. So how much is that? Inakuwa ni 2.5 divided by 12 times 15 million. 31,25,000. So 31,25,000. 31,25,000. Na tukimalizana na inventory tunaenda number 2. Na tukimalizana na code receivables tunaenda kwa inventory. Inventory ziko in 3 type. Number 1, we have the raw material. We start with the raw material. Raw material. Tunaanza na raw material kwanza. So in inventory tunaanza na raw material. So raw material in inventory for 3 months. So raw material in inventory for 3 months. So 3 over 12. Now, so that will be 3 over 12. Now raw material goes with direct material. So raw material goes hand in hand with the raw material, with the value of the raw material, which is 4,500,000. Inakuja ngapi? So 3 over 12 times 45,00123. 45,000, which is 1125. Aya. Tukitoka kwa raw material next, if on the next one which is work in progress are in the store for 2.5 for 2 months. So 2 months. So work in progress 2 over 12, but it will be a half of the cost of production, which will be we will present a half of the goods produced. Now, what's the value of the goods produced? The value of the goods produced itakuwa ngapi? The value of the goods produced. So the value of the goods produced ni unachukua direct material, so una add this one. So you add direct material, direct labor, variable overhead na fixed. Add hapa. So that is the value of the goods produced. Baka hapo. Let us add them together. So 45,000,000 plus 3750 123 plus 1500 123 plus 2250 123 inatupatia ngapi? Inatupatia let me go back. Okay, uko chini goods produced. Tuende uko chini kabisa. Work in progress, and so let's go to information number 3. Work in progress and finished goods are valued under the material, labor and variable. So kumaanisha ni mpaka hapa. Ni mpaka kwa hii, sorry, napako mpaka hapa. Ndio umetuambia. So the value of the goods produced ni direct material plus direct labor plus variable goods over. So let us add them. So 500,000 plus 3750,000 plus 15,00123. So mimi napata 97. Napata 9750. 97. Okay, let me go back. Work in progress and finished goods are valued at material, labor, and variable. So they are valued at with those 3 amounts. So kwa hivyo ni sawa 9750. It's supposed to be 9750,000. So unakuja unasema hapa 9750,000. So that's work in progress. Then finish the good. Finish the good. So let's see the finished good. Now finished goods represent one month of production. So 1 over 12 times 9750,000. Let us do it. So 2 over 12 times 1 over 2 times 9750,000. Napata 812,500. 812,500. 812,500. 812,500. Now mwingine ni 9750,000 divided by 12. same 812 500, meaning our inventory figure, the value of inventory, so tuko na value of receivables ndio hii hapa. So the value of inventory itakuwa ni 1125 plus 1125,000 plus 812 500 plus 812 500, so itakuwa ni 27 50,000. So that is the value of inventory. That one becomes the value of inventory. Now tukitoka kwa inventory tunaenda kwa finished, iko sawa. So hakuna any other item, so we can go to creditors ama payables, call them the payables or the creditors. Payables. Now payables iko kadhaa. Ya kwanza ni direct material. Direct material. Direct material wanatuambia ni 2 months. So 2/12, that's direct material 4,500. Haya. Tunaenda kwa direct material, tunaenda kwa direct labor 1 week. 1 week. So 1 week, so ni direct labor. Labor yetu ndio hii hapa, that's 750. So how many weeks are there? 50 weeks. So kumaanisha itakuwa ni that's 750. So how many weeks are there? So ametuambia we have how many weeks? Labor force is paid for 50 working weeks in a year. So we divide it by 50. We divide it by 50. We divide it by 50. Aya, tukitoka kwa direct labor tunatuambia variable overhead. Variable overhead. Variable overhead wanatuambia ina 1 month. So 1/12. So hii ni kusema 1 over, so hapa tungesema 1 week divided by 50. This was confused. So variable overhead ni 1,000, 500,000. Tunaenda kwa variable overhead, tunaenda kwa fixed overhead 1 month also. So ametuambia ni 1 month. Our fixed ni 2250,000. Then ya mwisho ni selling and distribution. Selling and distribution half a month, so 0.5/12. Half a month 0.5/12. Half a month 750,000. 750,000. 750,000. So tumalizie hiyo. So 2/12 times 45,00123 yatupatia 750,000. So 750,000. 1/50 times that is 750,000. 75,000. 1/12 times 1,500. This is 125,000. Now we are supposed to add the 2 so that we can get to payables. So 1/12 times 2250,000. 187,500. 187,500. 0.5 divided by 12 times 750,000. That 1 to 50. So let us find the total figure. So 750,000, 75,000, 125,000, 187,500, 31 to 50. Yatupatia 1,168,750. So this is the total payables. That is the total payables. That is the total payables. Total payables. Total payables. So now we can find the capital requirement. So we get the working capital requirement. So we write and say, sorry, my calculator imeraba chini. So tuseme Nderu suppliers. We say Nderu suppliers. working capital requirement, working capital requirement, for the month, so hiyo month ni gani? For the period, still not for the month, for the period ended at 1st March. So for the period ended 31st March 2020. So current assets, so our current assets, we have account receivables. So account receivable is 3125, account receivables 3125,000. 3125,000. You have inventory. Inventory in your hit 2750,000. 2750,000. We get the total current assets. So we add itakuwa 3125 plus 2750, 5075. Then we less current liabilities, na ni moja tu in this case. So we have payables. Payables ndio hii 116750. So we less 1168,750. So that we can get the working capital requirement. Working capital requirement. So itakuwa ni 5875,000 minus 1168,750. So the answer is 4706,250. So 4706,250. 4706,250. So that is one of the questions. That is one of the questions that requires us to compute the working capital requirement. That requires us to compute the working capital requirement for the firm. Now we can go to our past paper also. In our past paper, that is long time ago. Now when we check the in long time ago, we have a question. May 2014, question number 5B. May 2014, question number 5B. May 2014, question number 5, boy. May 2014, question number 5B. That is under FM revision kit. That's under FM revision kit. So let's do it together. Do it together. So May 2014, question number 5B. May 2014, question number 5B. The Board of Directors of Rand Mills Limited have requested you to prepare a statement showing the working capital requirement for the level of activity of 30,000 units of output for the year. The cost structure for the company product is as follows. Now we start with the raw material. So hii swali ilikuwa ni direct. So we start with the raw material. Na raw material wanatuambia ni 200 shillings per unit. So 200 times 30,000. Haya. Direct labor, it is 50. times 30,000. So 50 shillings per labor cost per unit for labor. Then we have overhead, the variable overhead. Hiyo itakuwa ni variable overhead. Wanatuambia ni 150 times 30,000. Haya, tutoka kwa variable overhead. Tuko na profit. So for now tunafikia hapo, tunaachia hapo. So we are interested with the overhead. So hii overhead si variable. So hii name to overheads. It can be fixed or variable. So tuseme 200,000. 200 times 30,000, which is 6 million. Haya, 50 times 30,000, 1.5. Haya, 150 times 300,000, which is 4.5. That one is okay. Now let's go to additional information. Additional information. Past experience indicates that raw material are held in stock for 2 months. So don't raw material. So in inventory. So we have raw material. Now raw material are in stock. So RM means raw material. So RM means raw material. So raw material are in stock for 2 months. So 2 months. Let me read the issue about the. Now, ukienda pale juu, the value of the level of activity is 30,000. Ukiangalia pale juu, 30,000 units of output for the year. Now, that year 30,000, hii 30,000 is for the whole year. So, kumaanisha we need to divide by 12. Times 12 times 6,000. 6 million, sorry. So, inakuwa ni 2/12 times 6 million. Inatupatia 1 million. That one is for raw material. That one is for raw material. Now we go to the next item. Work in progress. Now work in progress 100% complete in regard for material. So here lazima tufanye working kando. So work in progress lazima tufanye working. So we have work in progress. Now work in progress wametuambia 100% is complete for material. So pale material juu 6 million is complete the way it is. And then labor and overhead is 50%. But remember, it is there for only half a month. Half a month, so 0.5. Half a month represents 0.5 times. Now we need to do a working. Wametuambia that for work in progress, 100% is complete for material. So material 100%. So 100% times 100% of 6 million to remain 6 million. Plus, so 8 times 100%. Yabaki hivyo. Plus, the rest ni 50% complete. So tunasema pale 1,500,000 times 50% plus the other one is 4,500. For overhead also 50% complete. So that figure ndio unaleta hapa. So 100% is complete, so 6 million. Tunasema itakuwa ni 6 million. Tunasema 6 million times 100%. So which is 100 over 100 plus hiyo ingine ni 1,500. So amesema 50% is complete, so ni 50% plus ya mwisho ni 4,500. 50% still. So nimepata 9 million. Itakuwa ni 0.5/12 times answer, which is 375,000. So let us move on. I hope we capture that one. So I hope we capture that one. Next, we have finished good. So finished good, FG. So FG means finished good. Now finished goods are in stock for 1 month. So 1 over 12 times finished good. Now finished good hajatuambia anything to do with finished good, but we know finished good is the cost of production. Na ni hizo tatu. So cost of production, we need to pick the three of them. So let us pick the three of them. So we are supposed to add 6 million plus 1500 plus 4500, which is approximately 12 million. Na kutupea 12 million. 12 million. Okay, divided by now of 1 over 12, which is atupatia 1 million. So finished good is 1 million. That one is okay. Tumemalizana hiyo hivyo. Next we have creditors. So we want credits allowed to debtors. So kwanza ni hiyo ya debtors. Credits allowed to debtors ni 2 months. So debtors, we need to come up with debtors 2 months. 2 over 12. Now debtors inaendanga na sales. So remember debtors inaendanga na total sales. So tuko na sales yetu pale juu 500. You can see our sales is 500 per unit. 500 kwa pale chini. Selling price per unit is 500. Kwa hiyo statement times 30,000. So inakuwa ni 2 over 12 times 500 times 30,000, which is 25. Which is 25. Hiyo tumemalizana nayo hivyo. Haya. Another thing that we need is payables. Payables wanatuambia suppliers wanna take 1 month, so 1 over 12. Now 1 over 12 of what? So 1 over 12 of what? So suppliers goes with what? The suppliers wanaenda na nini? Wataenda na, I think they go just with the sales. Wataenda na sales ama wataenda na nini? Wataenda na, okay, let me see. Turudi pale kwa swali yetu. Okay, as we are checking that one, we have cash balance. You have to direct. Cash balance is 250,000. So you have a cash balance of 250,000. Now we need these payables. So we need to know the payables goes with what? Payables account. Najaribu kufikiria hii payables yetu itakuwaje. Itakuwa vipi? Wanatuambia hapo kwa hii swali yetu that payables, let me go back. Where is it? I think that tuna selling price. Kuna any other option. So payables we will just go with the selling price, which is 500 times 30,000. There's no any other option in this case. So 500 times 30,000 times 1 over 12, which inatupatia 12. Let me check just a moment. Let me check. So nimeona. So what we can do, so payables goes with the materials. Remember, when suppliers provide us with material na tujamuripa, ni kumaanisha our value will depend on the value of the material. So for example, if materials tulikuwa tumechukua on credit, ni kumaanisha that value of the material is what will be used to determine the payables. Now 1 over 12. Now remember the value of the material per unit is 200. 200 times 30,000. So you NB kama hujaambiwa mambo na payables, payables goes with material. Payables goes with material. Materials. That one is okay. So itakuwa ni 1/12 times 200 times 30,000, which is 500,000. Now we can come up with the working capital requirement. So we say rand mills. So we say rand mills. Rand mills. Working capital requirement. Working capital requirement. Ametupatia period. No period. So kama hakuna period, so tunaanza na current assets. Current assets. So tuko na inventory. So inventory tayari zote tatu. So we added them together. So itakuwa ni 23,75,000. So 23,75,000. Debtors ni 25. So we add 14,75. Then we less current liabilities. Okay, sorry. Even before we less the current liability, we have cash. Tuko na cash balance ya 250,000. Itakuwa ni 2375 plus 2500 plus 250, 5125. Now we can less current liabilities. So it is only payables. Payables 250 500,000. So kumaanisha working capital requirement. So this means working capital requirement. So working capital requirement 4625. 4625. 25,000. That's the working capital requirement. 46 25 46 25. Assignment assignment June 2011 question 4C. June 2011 question 4C. Na hizo ndio the only questions ziko kwa past paper. Hakuna kiswali ingine. That one. Juu kama kuna ingine. Kuna ingine hapa. June 2010 3A. Hakuna ingine dhiki hizo. June 2010 question number 3A. So make sure you try them. June 2010 question 3 iko kwa revision kit. Revision kit ya FM. The past paper is there. There is no any other question. So those are the only questions which appears in our past paper from June 2010 up to now. Swali ni ngapi? Ni ine. We only have 4 questions. Mbili tumefanya, mbili ni assignment yenyu. So make sure you do them. So make sure you do them. So that one marks the end of lesson 3. So that marks the end of lesson 3 of the prediction of working capital requirement. Prediction of working capital requirement. So that marks the end of that topic. So when we meet again, we are going to start from we are going to start where? We are going to start from, na hiyo itakuwa ni haraka, tutakimbia hapo. Working capital management or specific area of business. So capital management. So we are going to start from this. So that will be lesson 4. Working capital management. Working capital management on specific area of business. Specific areas of business. Specific areas of business. And to be specific, let me give you those areas so that tukifanya one tunatick. I think that will be enough in one class. Let me tell you. So we have, for example, management of cash. Lazima tumalize zote. So management of cash. Number 2, management of stock. Number 3, management of debtors. So I think that is what is remaining now. So next class I will concentrate with this one and maybe this one. Then stock to malizie the last class. So stock will be the last one. So tutakuja tuanze na management of debtors, then tuingie management of cash. So management of debtors iko na maswali mingi actually. That is what appears the most in our past paper. This one appears the most in our past paper, management of stock. Then management of cash, then stock. Stock mostly, yes, it appears, but mostly it appears in management accounting. But also we shall do it here. So that is all for today. We shall meet. We continue from that point.